Hi, this is Peter Schiff for the SchiffGold Friday Market Wrap. You know, I missed last week's Friday Market Wrap. I was traveling, but I am back now, and we had another big week in the precious metals. And before I get into that, let me just remind everybody to like the video and subscribe to this channel. We have a lot more people that are watching these videos every week than are subscribing, and I want to see if we can bring the subscriber count up. We're still below 40,000 subscribers here on the SchiffGold official YouTube channel, so make sure if you're not a subscriber to subscribe. Anyway, gold prices rose about 2.5% this week. They slipped about 0.5% the prior week, but at the end of the week, we settled just over $4,300 an ounce for the price of gold. Silver had an even bigger week. It rose 6% this week, and that's on top of a 3.5% rise last week. Now, this week's 6% rise comes despite a 1.6% drop today for the price of silver. But before silver dropped 1.6%, it was up quite a bit and then had a reversal. In fact, the high price for silver earlier today, I think, was $64.58. Now, we settled the week lower than that. Let me see where we ended up. About 61.90, so just below 62. But these are big numbers. But before we had that reversal, when silver was at its high earlier this morning, it was up 10% on the week. Now, year to date, gold is up 64%, and silver, based on where it closed, is up 113% on the year. Now, you can contrast that with Bitcoin, which is down about 5% so far in 2025. And we don't have that much time left for Bitcoin to crawl its way back into positive territory. But gold and silver are looking strong, and I think they're going to finish out this year even stronger. I think the big catalyst for the next leg up in both gold and silver is the decision by the Federal Reserve to resume quantitative easing. That announcement came out on Wednesday. Now, officially, the Fed did not launch QE, and they deny that what they're doing is quantitative easing. But that is exactly what they are doing. They're just not fessing up and calling it quantitative easing. What specifically did the Federal Reserve announce that they're going to be doing? Well, they said they're going to be buying treasuries, short-term treasuries, to the tune of about $40 billion in the first month, and then an undisclosed but ongoing commitment to continue to buy. Remember, up until this month, the Fed was selling. They were shrinking their balance sheet as part of quantitative tightening. They announced at the last FOMC meeting, before the one we got this week, that they would be ending quantitative tightening in December. Well, they ended it, but they didn't just stop shrinking the balance sheet. The balance sheet is now expanding, which is what was happening when they were doing quantitative easing. Now the balance sheet is going to expand, but supposedly it's not because of quantitative easing. But that's exactly what they're doing. I mean, the only real difference between what the Fed announced Wednesday and when they were doing quantitative easing is that with quantitative easing, they were targeting longer dated maturities, 10-year treasuries, maybe up to 30-year treasuries. In contrast, now they're buying short-term treasuries, right? A year. But that doesn't really matter. What matters is the Federal Reserve is creating money out of thin air and using that money to monetize government debt, to buy U.S. government debt. The maturity is irrelevant. What's happening is still quantitative easing, which, of course, is just another name for monetizing debt, creating inflation. That is what the Federal Reserve is doing. Now, a lot of people didn't think that this was going to happen. I've been saying for years and years that the Fed would go back to quantitative easing. I'm surprised they were able to hold off as long as they did. Now, the reason they probably didn't want to acknowledge that this is quantitative easing is because they don't want the markets to be worried that the Fed is now having to do this. So they're trying to claim that, well, they're just trying to manage their reserves and they want to make sure that their reserves are ample. I mean, the balance sheet is $6.5 trillion right now. Isn't that ample enough? But they want to have more treasuries on the balance sheet, and so they're going to buy them. That is quantitative easing. And also, it won't be long before the Federal Reserve expands this program and lengthens the duration. So sure, right now they're buying short-term treasuries. It's only a matter of time, and probably not much time, before they start buying longer-term maturities. Now, they're probably never going to admit that what they're doing is quantitative easing, but clearly that's what they're doing. And the reason they're doing it is because they have no choice, because they're trying to suppress interest rates. And to do that, they have to expand the balance sheet. They have to buy more treasuries to get the yields lower. Now, in reaction to the announcement, and this is another forecast that I've been making, the yield on longer-term treasuries went up. In fact, the 10-year treasury yield closed at 4.19, and the 30-year is up to 4.85. So yields rose on the week, despite the fact that the Fed reduced short-term rates by another 25 basis points. They're down at 3.5 to 3 3/4 on the Fed funds. But despite that reduction, longer yields went up. That also means that mortgage rates ticked up, the opposite of what everybody is hoping for. The markets, the Trump administration, they're all looking for the Fed to help bring down long-term rates. But long-term rates are rising. And in fact, because this new stealth QE is targeting short-term rates, they're not buying these long-term bonds. So the long-term bonds are falling and yields are rising. And I think yields are going to continue to rise. And I think it's that backup in long-term yields that is going to be the catalyst for the Federal Reserve to expand the quantitative easing program to include these longer-term maturities, because they're going to want to put downward pressure on long-term interest rates. But what they've just done is already putting upward pressure on those rates, because they are creating more inflation. They are printing more money to buy short-term U.S. government debt. That is inflationary, and that is going to weaken the dollar. And in fact, yesterday, the dollar dropped and it hit a 2-month low, was kind of stable today. But to me, it looks like the dollar has now finished this correction and it's resuming its downtrend. I think that is going to accelerate. So you've got the dollar falling, you've got bonds falling, you've got gold and silver rising. This is exactly what you would expect in an inflationary environment. And of course, you know, inflation is the biggest problem right now. When you hear the Democrats talking about affordability, right, as if they had nothing to do with how expensive everything is. I mean, they were very key in, in pursuing policies that created all this inflation, that led to the Fed monetizing all this debt. So they don't have clean hands when they blame Trump for the affordability crisis. But of course, neither does Trump, because his fingerprints are all over it too. He helped make things more unaffordable during his first term. And the policies that he is pursuing during his current term are also inflationary. But given the fact that inflation is already 3%, right, the way the government measures it, it's a lot higher than that if we honestly measured it. But given the fact that inflation is already 3%, and Powell said at the press conference that the Fed is still committed to bringing inflation down to 2% and that the current rate is too high. In fact, if their target is 2%, they've been above it for 5 years. So clearly it ain't working. They keep saying they want 2%, but we're at 3% and rising. But if the Fed is really serious about bringing inflation from 3 to 2, why did they cut rates again? They just cut rates 3 times in a row, but inflation is moving higher. Plus, if the Fed were really serious about bringing inflation down, why are they doing quantitative easing? And even if they don't call it quantitative easing, why are they expanding their balance sheet? Because that is inflationary. The reason they're doing all these things is because they really have no intention of bringing inflation down to 2%. In fact, I think they realize that inflation is probably never going back down to 2%. It's just that they don't want to admit that. But, you can't look at what they say. You have to look at what they do. Actions speak louder than words. And the Fed's actions are that inflation is not going to 2%. In fact, it's going to be much higher than 3%. But the Fed really doesn't care because it's too concerned about the economy. And it's not just employment, because the unemployment rate, the way the government measures it, is still relatively low. I think the Federal Reserve sees a much bigger problem in the housing market, where housing prices might collapse, in the stock market, where stock prices might collapse, and also just in the enormous cost that the U.S. government has to pay to service a $39 trillion national debt. I think the Federal Reserve realizes that rates need to come down, despite the fact that inflation is going up, to maintain the ability of the U.S. government to service its debts and to keep the air from coming out of all this asset bubbles that it inflated in real estate, in stocks, in bonds. Now, I don't think the Fed is going to succeed in preventing these bubbles from deflating, but that doesn't mean it's not going to try. And when the rate cuts are not sufficient, and when this new round of quantitative easing is not big enough, all of this is going to be expanded. And that's why these bull market in gold and silver is going to continue. And, I have been really pounding the table ever since I started. I took over the mic on the SchiffGold Friday Market Wrap, that everybody load up on precious metals. In fact, I do these on a Friday, and, the markets don't really resume trading until Sunday night, but it's 24/7 at SchiffGold. You could go to our website and buy gold and silver. You could buy it on Friday night, buy it Saturday morning, Saturday night, Sunday morning. Generally, the prices are pretty much where they closed. And you want to do that. You don't want to wait for Monday, because I think, again, we're going to be very strong on the open. In fact, I expect silver to be back up at the high from today, maybe by Monday. And gold, before gold sold off, gold was up about $70 at the highs today. And it still closed up over $20, even though silver was down, $1.60, right? Gold held strong on the day, even with this profit taking. But gold got less than $30 away from hitting a new all-time record high. Now, if you recall, on the last SchiffGold Market Wrap that I recorded, I specifically said that silver was going to hit a new record high before gold. That prediction came true. I also said that gold and silver stocks, the GDX and the GDXJ, which were way off their highs, I said that they were going to hit new record highs, or new highs for the year, before gold hit a new high. And that prediction came true this week. We had a big move up in the GDX and the GDXJ, both indexes hitting new highs. This is another great sign, because in the prior leg of the gold bull market, gold was going up, but you weren't seeing confirmation in silver. You weren't seeing confirmation in the mining stocks. Now we're seeing confirmation by both. Instead of gold leading silver and the mining stocks, it's following. Silver has now taken over the baton from gold. Silver is leading the charge higher. Yes, it's doing it with more volatility, but it is leading. And the gold mining stocks are now leading the metal. You see, in the earlier stages, a lot of people were looking at the gold rally with a lot of skepticism because they weren't seeing the confirmation in the silver market, and they weren't seeing the confirmation in the mining stocks because mining stocks investors didn't have confidence in the gold rally. They expected gold to collapse, and so they didn't want to pay up for earnings that may never materialize. And so there was a lot of hesitancy to buy the gold mining stocks. But now that people are buying those stocks, it's because they're starting to realize that these high gold prices are here to stay, that gold's not going to come crashing down. And so these high earnings are going to continue. And in fact, at some point, people are going to recognize that not only are high gold prices here to stay, but they're going to get even higher, that the market's going to keep rising, which means earnings are going to keep rising. And so now stock investors want to get ahead of that. So now we have a more traditional bull market where the stocks are leading the metal, anticipating the increase because stocks are forward-looking, right? Stock investors are trying to predict the future when they buy stocks because they're making a bet on what those earnings are going to be. And when you have a nice bull market where investors expect the bull market to continue, you would expect them to pay up for the gold and silver stocks. That's what they're doing. Now, those stocks are still cheap, but at least they're leading the way. And I've always said that in a real gold bull market, silver outperforms. And up until this year, it was underperforming. That's why earlier in the year, you could buy 100 ounces of silver for 1 ounce of gold. Now, I didn't check the ratio, but I think it's around maybe 67 or something. It's below 70 to 1. Still cheap. Silver is still cheap, but it's not nearly as cheap as it was. And remember, when silver got through 50, what was I saying on this market wrap? That was it. That now we have the double top is now support. 50 is the floor. And yes, I said we could go a little bit below it, and we did. We traded a little bit below it, but all of that was buying opportunity. And now we shot up, and now it's likely that silver's not going back to 50 again. It's not impossible, but it's very improbable at this point. In fact, I still believe that silver is going to hit $100 next year. And gold, at least 5,000, probably 6,000, maybe more, depending on what happens in the foreign exchange markets. If we get a dollar crisis, if we get a U.S. Treasury crisis, I mean, we're going to get those crises eventually, so it could happen next year. And if it does, then those upside projections are going to be much higher. But I do think that as the world really gets to think about what happened here with the Federal Reserve and their new policy, you're going to see big buying in Asia in both gold and silver and platinum, by the way. The whole precious metals complex is going higher. And so why wait? Why wait for Asia to think about this and start buying? You got the whole weekend to go to SchiffGold.com and buy gold and silver now. Or, anytime you happen to hear this, this update prior to Monday's stock market trading, or actually Sunday night, because once, the Asians wake up, Sunday night and start buying, right? You want to beat them to it, right? You want to get in there before that. And again, also, in addition to taking physical delivery, every Schiff Gold customer, everybody who watches this video needs to go to tgold.com. That's tgold.com and open up an account and buy some gold or silver. Even if it's a small amount, doesn't matter. Buy $100 worth, $1,000 worth, doesn't really matter. But I want to make sure that everybody opens up an account and gets positioned to have some gold at T-Gold. I mean, right now the T just stands for trade. So you could trade your gold. But eventually you'll be able to redeem it in a token. We're going to tokenize this gold for people who want to have it in that form. And the beauty of having tokenized gold is that it's very easy to use it as a medium of exchange, which is what I want. I want in the future more people transacting in gold. When you earn money, you should earn gold, right? And when you make payments, you should pay gold. And tokenized gold makes that very easy. In fact, it's probably one of the only things that will end up coming out of the blockchain that has any real value. And in fact, the other thing that I think is going to help propel gold and silver to new heights in 2026 is going to be the collapse of Bitcoin and the unraveling of the digital gold narrative. Digital gold is what I want to create, tokenized gold, which is backed by and redeemable in real gold. Bitcoin is digital nothing. And in fact, Bitcoin is being proven. It's to be nothing, right? People were saying that Bitcoin was going to be the fastest horse in the race once the Fed really started printing money, cutting rates, going to QE. Well, they've done all that. And not only is Bitcoin not the fastest horse in the race, it isn't even running in the race. I mean, it's out to pasture, right? It's going down while precious metals are soaring. And I think the bottom's going to drop out of this market. You know, Michael Saylor at Strategy is really getting desperate now in what he's doing and how he's trying to redefine his company as a creator of digital credit and all this nonsense that he's saying. Meanwhile, the bottom is dropping out of the stock. I think this whole thing could implode next year. And when that happens, as Bitcoin collapses, I think that's going to clear the way for gold and silver. I think a lot of people who may have been hesitant to buy because they thought Bitcoin was going to supplant gold, they'll see that was all nonsense, and they might buy some gold and silver. And people who own it, you know, to the extent that they can get out, not that many people will be lucky enough to get out, but the ones who move quickly and manage to salvage some of what they put in to Bitcoin will be able to take what they have left and get into gold and silver. And, you know, if you're still holding on to some of this fool's gold and you go to SchiffGold now, you can use BitPay. You can check out using BitPay and you can convert your Bitcoin. While Bitcoin is still above 90,000, that's still a lot of money to get for nothing. So you can sell your nothing for 90,000, per Bitcoin if you have a whole Bitcoin, and you can sell it, and then you could take the money that you get and you could buy real gold. You could buy real silver, or you can sign up and open up your account at T-Gold and ultimately take delivery of tokenized gold, which is a hell of a lot better than tokenized nothing. And, you know, certainly better than stable coins, which are tokenized dollars, right? Which are going to be anything but stable because the dollar is going to get killed. And by the way, if you want to get my take on my debate with CZ, it's one of the things I did. There's been a lot of press about that and the gold bar incident. And also, you know, Donald Trump calling me a jerk and a loser and a Trump hater on Truth Social, right? If you want to get my take on that, I don't want to repeat it because just yesterday I recorded over an hour podcast on my main channel on YouTube, the Peter Schiff. It's over an hour long. And listen to the whole thing. Of course, I did a much more in-depth analysis of what's going on with the Fed on that video. So after you're finished with this one, go over to my main YouTube channel. And if you're not a subscriber to that channel, subscribe to that one as well. But we got, you know, over 600,000 there. So a lot of you probably already subscribed, but you're not subscribing to the SchiffGold channel, although you should subscribe. Again, I'll remind you to subscribe to it. But go over there and you can get my take and you can get a lot more in-depth analysis of the Fed move. But in the meantime, the real purpose of this update is to make sure that you Fed sitters get off the fence. And, you know, I've talked to a lot of the guys at SchiffGold, and this has been the problem. It's been the problem now for most of this year, is that people are reluctant to buy because they want to buy a dip. You're not going to get lucky. There are not going to be any dips that are big enough to wait for. And as I've been telling people to buy, look at the price. We're at 4,300 gold. We're at $62 silver. Now what kind of drop are you waiting for? You have to resolve yourself to the fact that the bear market is over. The correction is over. This is a huge bull market, and prices are just going to keep going up. Now, are there going to be days when they go down? Sure, like today, silver went down. But you know what? You blink, you're going to miss it. And the declines are not big enough to matter. What's going to matter if you don't buy it all while you're waiting to buy cheaper? Or ultimately, you panic in, right? Do you want to buy $100 silver? I'd rather buy it at 62. Now, you might buy some at 102 because you might have more money when it is 100 and you want to protect it. And you're going to have to get used to paying higher and higher prices for gold and silver. If you want to take part of your earnings every year and set them aside and keep them safe, you're going to be an ongoing buyer of gold and silver. It's not like you've got all the gold and silver you need. If you're trying to build up your savings over time as you earn money, and some of the money that you earn, you don't spend, you're going to be paying higher and higher prices for both gold and silver because this is a huge bull market. And it's not really gold and silver going up, although they're going to be going up. Think of it more as the dollar going down. The dollar is going to keep losing value and prices of everything are going to go up. But I think the price of gold and silver, those prices will go up a lot faster than a lot of other prices, which means if you put your savings into gold and silver, when you tap into those savings in the future to buy things, prices for you will be cheaper in terms of the money that you saved. And ideally, if you have that savings in T-Gold, you may be able to directly access it to either pay with a token, or we're going to marry the T-Gold accounts with debit cards where you will have real-time access to your gold 24/7 to spend it whenever you want, or, you can earn, right? But if you want to tap into that increased purchasing power when you go to the store, you can do that. And so everything you buy, instead of it being more expensive, it will actually be cheaper because the stuff that you want to buy will cost fewer grams of gold than it cost when you bought those grams of gold, when you saved in them, right? If you're saving in dollars, then everything is going to cost more. So purpose of this, again, video is not just to update you, but to urge the people that are listening to this, buy gold and silver. Forget about the price. Don't worry that it's higher than it was. Stop thinking you're gonna catch a cheaper price. You know what? If you can buy more next time cheaper, great. You got lucky. But you can't just keep sitting back and waiting for a big correction, a 10% or 20% correction. They might not happen. And by the time they do happen, the chances are the prices will be a hell of a lot higher than they are right now. Anyway, before I wrap this up, I wanted to mention, because I forgot to point it out on my official podcast, but I have been telling my podcast listeners, YouTube subscribers, every time my wife comes out with a new song from her album, Funny Money, my wife partnered up with Tony Frettinelli. He's the original guitar player from Third Eye Blind. And so he teamed up with my wife, and they've been coming out with these songs. My wife writes the lyrics herself. She sings the songs, and she works with Tony Frettinelli on the music. He composed the music, but, she helps arrange it and get it all sounding right. And it's been a while since the last song was released, but the newest song just came out this week. It's called Yesterdays. And you could listen to Yesterdays on Spotify if you have an account there. If you don't have a Spotify account, they have a YouTube channel. The group is called Laughing Cats. And if you go to if you just search Laughing Cats Music on YouTube, it'll come right up. And you can click on it and you go to releases and you'll see the newest song is Yesterday. So give it a listen. I think all this music is good. It's entertaining. I think they do a great job. And so I want to bring it to the attention of my followers, because they might otherwise not know that my wife is making this music. I mean, she's doing it for fun. This is not a career, but she really enjoys doing it. And she really enjoys the positive feedback when people, enjoy her music and her creativity. And so when you listen to Yesterday's, right, after that song, just listen to them all. There's 6 songs that she's already put up there. They're all of them on her YouTube channel. She actually has made some music videos, but a lot of them, they're all there. The most popular one so far is still the first one that she released, which is GYB. So make sure and listen to that one. But they're all good. Jerk, in particular, I think is a very, very good song. I think that's my wife's favorite of the 6 that are out. But again, I think they're all good in their own way. So give them a listen. And, if you like them, I know she reads the comments. So if you enjoy the music, let her know. Give her some positive feedback. And so you can do that after you finish buying some more gold and silver at SchiffGold or at tgold.com. Meantime, enjoy your weekend, and I will be back again a week from today with another SchiffGold Friday Market Wrap. Bye for now.